President Trump extending the ceasefire with Iran. But don't consider that backing down. The blockade ain't going anywhere. The clock's still running for the regime to submit a unified proposal for peace. Welcome to the Big Money Show. I'm Dagan McDowell, along with my co-host, Taylor Briggs, Brian Bremberg, who got a haircut.
Check it out,
apparently.
Huh? Taylor loves it. Ask her about
it. Did he do it himself?
What?
Jackie DeAngelis. And with us for this hour, Great Hill Capital Chairman Thomas Hayes. The move by the president signals a dual-track strategy: hold fire militarily, but the economic pressure not letting up. Treasury Secretary Scott Bessent saying that Iranian oil storage is days from being completely full. That's when the wells get shut in and Tehran runs out of options and begins to run out of money. Overnight, Iran's regime attacked at least 3 ships in the Strait of Hormuz, a power struggle playing out in real time between the country's pragmatists and its hardliners. The price of West Texas Intermediate is trading around $91 a barrel. Can we show WTI? And then AAA says the national average for a gallon of gasoline is still holding around $4 a gallon, $4.02 at the moment. According to Democrats, that qualifies as an energy apocalypse.
The administration has a big problem right now because they have created an energy apocalypse in the Strait of Hormuz, which is impacting every family.
I could talk about the likes of Ed Markey for hours upon end, because pain is the point when it comes to energy prices if they're pursuing a climate agenda. But Jackie, focus on what's happening with Hormuz, Iran, the kind of dual track of a ceasefire, but still economic pressure?
Well, as long as the blockade is up, we're in good, a good position, I think. The president is, and the United States is, because Iran is losing almost $500 million a day in revenue, and that's a huge issue for them. That's what's putting the screws to them. That's even made them have these conversations. But the New York Post has a great article by the editorial board, and it's entitled "The Iranians Can't Be Allowed to String Us Along Much Longer." And I agree with that point of view, because they can't make up their mind. They're fragmented and fractured internally. The person who's technically in charge might be willing to make a deal, but then another segment of their new regime, as we're calling it, will say, why'd you make that deal? We're not making that deal. And obviously, the president's got a couple of really important facts that have to be included in the deal. You give us the nuclear weapons, the enriched uranium that you have, you allow inspections, you're not going to be doing this anymore. And I think that's going to be a tough nut for them to crack and to come together on. What the Iranians are trying to do right now in stringing this along, or taking as much time as they need, is creating a situation where they potentially can rearm. This time off has given them a moment to breathe. So if we do come back a little bit stronger with the military force, they will be in a different position than they were when the ceasefire started. I'm also thinking about the longer this goes, the worse it is for oil prices and gas prices, even though I'm very impressed that oil is staying under $100 a barrel. That's really significant. But, you had that vote in Virginia yesterday for the redistricting provision. You've got a past round of elections heading into the midterms where Republicans didn't do very well. And the Democrats keep hitting this apocalypse theme, that this was a war of choice, that gas prices are high, that people are suffering because the president at his whim decided to do this. And that is just, it's a bad tone to have out there. And whether you like it or not, or whether you disagree with it or not, they're loud about it and they are putting it out there. So, the president said this can go on, 3 to 5 more days. He said he wants to take his time. I think we're in a position of strength as long as we secure the strait and keep that blockade in place. But there are people out there saying, okay, let's get to it. What are we doing?
Who wants it?
I can jump off. Tom, agree or disagree with me when it comes to these markets. Dagan, in the last couple of days when you were away, I said I am just so impressed by the resiliency of these equity markets. Of a market that was at record highs in January. We had a big 3-week reset in March, and then we have come back and then some and stronger. And so to me, this is a market that saw that correction in March as a really good, healthy reset in terms of sentiment. People buy, and then those highs beget new highs because you've had that big reset in March. And so I think the rally, if the fundamentals remain intact, which so far they are, continues. I think because people are really excited. We've talked about earnings season, how strong this has been. I know that we'll talk about some of those companies later. There's also another really interesting note I read about how, you know, day to day we can say the market's higher, the market's lower, but I think long term in a portfolio, you are looking at countries and companies that see these chokehold points in the Middle East and say, maybe I need to rethink my supply chain. Remember in COVID, we all looked at China and we thought, okay, maybe I need to nearshore or reshore. And I'm wondering if companies are thinking, how do I rethink supply chain so that I'm not subject to this if this continues to go on? Does that mean that power, resources, commodities remain relevant to investor portfolios if these are going to be the companies that say, I'm going to long-term change the way I think, the way I import, the way I do business, and if I want that to be in the U.S., then what does that mean going forward? And then another quick note, I think an hour from now, we're going to get a 20-year bond auction. We've had decent demand, even though yields have been rising. The 10 years at a 430, so the 20-year, there's not like a real benchmark for the 20-year because it's been a little bit more scarcely traded, but that will be also something that I watch in terms of a sign of demand and where investor sentiment is. Last time, I think the 20-year in March came at around a 488. Yields are only about 6 basis points higher than when that last came. So those are just a couple things I think long-term I'm watching as I think about this market.
Yeah, I think to your point, Taylor, this is going to accelerate reshoring. It's going to accelerate the industrial renaissance. We talked about building out data centers on your show last night. But the blockade from a market standpoint was brilliant. It's called Checkmate. They've got one piece left on the board. It's the king. And they can keep moving around while we have 12 pieces, but eventually we're going to get them into the corner and they're done. They're losing $500 million a day. Time is on our side, not their side. They've got widespread protests, anti-government protests happening everywhere in Iran. And the market said, we're going to look through this. Already, around 7 to 9 million of the 20 million barrels has been rerouted. U.S. production is up, so we can withstand this much more so than they can withstand this. Markets figured that out. Bet on American energy. We're energy independent. They got that right. The drill baby drill 5-6 years ago was the right call, and look where we are today.
Man, I'm with Tom today.
Yeah.
I am with you on that. I think the blockade
Is it your new hair?
My new hair is making me very positive in life. Yes, I just feel like I've got
We have the same barber
on life with the hair. Everybody should get a haircut. Everybody should get a haircut.
It's more oxygen to the brain on the sides.
Yes. Yeah, I'm getting the flow through my ears is really good right now. But I don't even need to think that much because Tom already laid it out. I'm with you. I think the blockade's brilliant. I don't think, I hear what you're saying in terms of the bombing, Jackie, like they're getting a little bit of breathing room, but they're not getting a lot of breathing room because the blockade is just choking them off. Now, I will say, clearly they have something left because they got these, I don't know what you call these boats that they got going through the strait, and they're clearly causing trouble. At least reportedly for some ships. So what is a ceasefire? 3 to 5 days more, did he say? Is that kind of what he's talking about? How about on the 3 end of that? And just go into the strait and decimate what they've got some Navy left, decimate that, choke off the money, decimate their Navy. And then I'm going to say it again, and I know Larry's going to come on the next hour and he's going to poo-poo this. But I think you got to get, from the standpoint of confidence for shippers to start moving stuff through the strait, I think you got to get these weak-kneed Europeans to the strait, and they got to help a little bit because if they're courageous enough to go there, then I think other people are going to be courageous to go through there, and it'll help. Okay, I don't love the Europeans. I think NATO has fallen flat on its face on this, but it would be helpful to get them.
Yeah, I think there's no accident that it's 3 days because that takes you to Friday after the close. So get a deal or get bombed over the weekend is basically how it's going to go. So so we hold all the cards here.
I've had a lot of time to think, and I wanted to, because Taylor, everyone here since the conflict started, you said very early on the market feels like it's ready to rip. In the throes of the uncertainty and the unrest and the downward draft in the market. And you were right. And you also focused on, in terms of economic growth, the Atlanta GDP, the GDP now, Atlanta Fed, was showing paltry little growth for the first quarter, but you said focus on earnings, and that's what's driving these markets to the plus side. Yeah. And the Iran conflict, before we move on, it has been extraordinarily healthy for our energy business. I will point to our product exports based on today's inventory data, energy inventory data, are at an all-time high of it's almost 8.1 million barrels a day. 915,000 of gasoline departures, 1.6 million barrels of distillates moving offshore. This record maybe won't last, but it shows our superiority in terms of fossil fuels. And then also, there's been no sign of demand destruction in U.S. gasoline, even with these prices where they are, which is actually a sign of economic stability in the American household. As much as people don't like it, and these prices will ease. That means they will be able to spend their money on something else. But that's a symbol of the strength of the U.S. household finances and the American economy.
All right.